G'day guys and welcome to the weekly VEMA Trader Market Scan. My name is Rhys and today I'll be running you through my thoughts on Bitcoin. So in this video we will take a look at the trades that we set up last week and we'll see how they played out. Then we'll take a look at Bitcoin as it stands today. We'll see what we can see on the charts, see if there's any trades that we like the look of and potentially set those trades up if we do find any that we like. So what we'll do is we'll head to VEMA Trader and we'll get started. Alright, so here we are now within VEMA Trader and we can see immediately that the three trades that we set up last week haven't entered. They're all still in the monitoring state because price did not make it to them. So I'll just review these all at once because they're all really similar, so we don't really need to get into all three of them. But they're all short from supply zones that lined up with the daily fibs. The first one was from that 38 fib, and the fact that it hasn't been hit means that the other two can't be hit because obviously it has to hit alpha and go through the 38 fib to get to the 50 fib. So I'll talk about what I think this means in the following section of the video, but for now I'm quite happy to leave these on. I still think those are really good levels to be short from. If I take them away, I'm probably just going to end up resetting them when I do start setting up trades, on Bitcoin today. So I'm quite happy to just leave these here for now. Alright, so here we are on the weeklies and there's not much to report here. We had one candle last week, which is usually the way these things work, being weekly candles, and you can see it's kind of a bull hammer. It has pushed down a bit and then been brought back up, but it's still closed lower than it opened. And especially after this harsh of a sell-off, the fact that we're not really seeing buyers stepping in, we're seeing buyers kind of holding price, but not actually pushing price back up, sort of indicates to me that we might see more downside before we start to see some upside. So I'm still looking at that 19k level on the weeklies. On the dailies, things are still really not looking good, right? We're looking at Bitcoin on this candle, the 13th of May, last week, and you can see the 7 candles within have really just been this quite small consolidation zone that only measures about $3,000, right? About $3,000 after a huge $23,000 sell-off. So it's quite a small range. The good thing is when you see small ranges like this, where Bitcoin stays in a really tight range for a while, when the break comes, it's usually quite a volatile break. It usually does lead to big moves one way or the other, but I'm really not seeing anything that's making me feel bullish when I look at these daily candles. Buyers just really aren't managing to push price up. Now again, sellers aren't managing to push price down either. It's really just stuck in that range. Eventually one side will win. That's kind of how these things work. But for now, until I really see, I don't even know, like a big bullish engulfing, I'm not going to see a market structure change on the dailies for quite some time. I would be looking for these highs and really this high back at 48k. But certainly these sort of $40,000 and $42,000 highs to be broken to see a market structure change on the dailies, just for the way that I measure market structure, which is different how most people do. So, that might not agree with what you're seeing. But yeah, overall, really looking at the dailies, I don't see a whole lot that makes me feel bullish, which basically just continues me thinking bearishly. I do still think that a retracement up to that 38 or even to the 50 is possible, and to some extent likely. But the longer that we consolidate, the more I would start to expect downside rather than upside. So that's how I'm seeing things at the moment. That may change. I'll keep you guys posted as I always do. Okay, so I've actually scrolled way back to early 2021 on the 4 hour. In fact, the very, very start of 2021. I just wanted to show you guys the importance of looking left when you're doing your charting. So you can see I've marked off these two 4 hour EQs, the ones in orange, as levels that have been pretty well respected. Now, this upper one might be a little bit hard to see at the moment, but you'll see as I scroll along, it gets really important. And then this lower one was sort of a flip, right? We tested as resistance, broke it, tested as support, went and ran. Now, the upper one, you can see has held really beautifully when we finally came back down there in May. It was really solid, right? That is a perfect close on it and a bounce. All through here it was acting as support, acted as, kind of a consolidation period there, and then acted as support again. And when we come and take a look at the current state of Bitcoin, I still see that as being really valid. In fact, I hadn't actually looked left yet. I marked it off based on these closes, and then I went and looked to see, okay, was this a previous level, or, because just these closes isn't a whole lot to go off, but you can see it's actually a really old level that's being really well respected. On the downside, we showed it in the start of 21. Yeah, it was 21, wasn't it? So that's, over a year ago. At the start of 21, this level is being respected really well, this 28k level, and it's being respected again. So those are the two key levels, in my opinion. That's what I think is really important for Bitcoin at the moment. Once it breaks one of those, we're potentially going to be out of this range, or we really will be out of this range. You do have this whole, wick and sort of buy back in. But those are really the key levels, in my opinion. If we want to turn bullish, we have to break that 31k level. If we want to turn bearish, we have to break that 28k level. There is a bit of a trend line forming through here. And so people may be looking at an ascending triangle, forming something like that. That's fine, it's definitely valid. There is a pretty solid level through there, so that's sort of 30,500 level. The reason that I wouldn't bother marking that off is I don't want to forget about this level and go, oh, we've broken out. We've now broken that triangle. I'm going to get into a long. We come up here, hit that resistance, which has been really solid in the past, and then reject. And I'm in a long from here. I then get stopped out. So to me, the really key level is that 31,600 or so. I still really like these shorts, as I said before. I do think even if we head to the upside, it may not be super long-lived. Even though we're heading to the upside on the 4-hour, or we may head to the upside on the 4-hour if we do break out of there, doesn't necessarily mean things are going to turn around on the daily and the weekly. At some point, right, every weekly pivot, at some point has to be a 4-hour turnaround, and at some point has to be a 1-minute turnaround that leads to that. But it's a pretty huge call to start seeing those sort of things from where we are right now. So I think I'm going to play this one both ways. I think I'm going to set up 2 phase 1 trades, the ones where we look to target these zones. I feel a bit nervous about doing the one on the upside because it is against my bias and everything, and I just don't have the structure to put a stop loss in at the moment, so I might not do that. But I'll go and set up certainly the one to the downside. I'll come back and I'll talk to you guys about the other one in a second. Alright, so the trade that I will set up right now is the short from Delta, which I was essentially looking for the break of that 28,500 level. So what I've done is set a short cross that will only enter when I get that candle close. I always want to have candle close on my crosses. It's just the way that I like to trade. In terms of risk management, I've dropped my risk reward to 1.5 because this will be a trade that will have a lot of confirmation, so I'm happy to take a lower risk reward on it. Account risk is 1 because it is with my high time frame bias. My high time frame bias is short or bearish, and this is a short, so they kind of agree. Both are betting on the market going down. I use a fixed value stop loss, so I sort of just looked. There is a bit of an EQ through here, and so I just wanted to have it clear of that, because that way, if we do come down and close below, even if we wick back up, there's a good chance that will act as resistance and hopefully push price down, and that way my stop loss is slightly clear of that. So that can potentially help keep me in the trade. And in terms of where I'm targeting that daily demand level, so about 24,000. So the only thing of note in my tags, so all these other ones are ones that I've used pretty regularly, right? It's a phase 1 trade, which is what we call the ones where we get the break and target my zones. It's a test strategy because I've only got maybe 3 or 4 data points on this one. With my high time frame bias, that's the WHTFB, bearish daily bias, 4-hour EQ. The only one I've really added that's something different is in pain, right? I have done something to my lower back. I'm not sure exactly what. Was lucky enough to get into physio today. I wasn't meant to be able to get in for a couple of weeks, but they had a cancellation, so I was very happy about that. And it is feeling somewhat better now, but it has been pretty bad. So, mentally I feel good. I feel with it. I feel fine, but I know my mood is a little bit off, just not quite right because I'm dealing with this, and so I just wanted to mark that in pain. Hopefully it's not something that I ever have to tag again. It'd be fantastic if I never tag that one again, but if I do consistently find that I have something wrong and I'm trading, it's worth noting that because it could definitely be affecting my mental state, and that will affect my trading. So I've just made a note of that in my tags. My mood is neutral for probably the first time while I've been doing these videos. I'm probably actually happy. I'm not super sad, but I am just not as happy as I like to be because that is sort of messing with me a little bit. So that's what's going on with this short. So we will save that one. Now, the long, let me get rid of that drawing tool. That gets me, I reckon, every time. The long from Echo. So what we're looking for there is the break of that 31,600 EQ. We're looking for something like that, but I don't want to set that up right now for similar reasons to a couple of weeks ago. We were talking about something similar. What I really want to see before I would place that trade is us break that first level that I was talking about. So let's talk about this one. So I really want to see that get broken, price come up and test that 31,000 EQ that I'm really keen on, then bounce off that EQ, and then I want to be getting into this trade. So I'm really not going to set this Echo long up until I see, you know, price consolidating here after breaking through and then coming back. I may never see that. That's cool. Then I'll just never set that trade up. But that's really what I want to see that do, because it would sort of just indicate to me that the market is doing the things that that makes sense to me, right? If we just bust up and close there now, I don't really have anywhere to put my stop loss. I could put it below this level in the same way that I did with the EQ on the lower side, right, for the short. But I'm not as keen on that one. Possibly to do with my high time frame bias being bearish, right? So I'm always a little bit more cautious going long when I am counter trend trading. So that could be to do with it. But yeah, really what I want to see is we come up, we come back down, then we bounce, and that's when I'd start getting quite keen on this long. And I'll probably just be targeting that 38. I might target the 50, to be honest, and just move my stop up quite aggressively to sort of lock in price movements as they come. But if I do see what I like or what I want to see for that trade, I'll make sure to post in the Discord and update you guys if I set that trade up. So that's it from me. The only trade that I'm really adding this week is the short from Delta. We already have the Alpha, Bravo, and Charlie shorts, and then potentially a long from Echo. So as always, make sure you confirm and save those trade plans. And yeah, that's it. Hopefully you guys are smashing it in the markets. I know that a lot of people do sort of shy away from trading when the market is quite bearish or just not really looking that good as it is at the moment. It depends on your trading style. For some people, this is a great market to be trading. One thing I would urge you guys is put in the time now, right? Whether you might just paper trade. That's one of the beautiful things of VEMA is you can just paper trade, never risk any real money if you want. Cut your teeth in a bear market. Cut your teeth when the market's not doing well, because then when the market turns bullish, you'll be in such a better position to take advantage of it. It will make such a huge difference. Whereas if you step away and come back when the market's bullish, one, you potentially won't know the market's bullish until halfway through and you'll have missed half the gains of it. And two, you won't have all the experience of dealing with a bear market. You're more likely to make mistakes with your risk management because you won't have really practiced those sorts of things. So bear markets are huge for getting in practice, right? Even if you can't necessarily make money in them, get onto paper trading and do what you can there. And then when the next bull market comes around, you'll be in such a better position to take advantage of it and really, really do well. So that's it from me, guys. Have a great day. Happy trading, and I'll talk to you very soon.